Good morning and welcome. I'm Pete Najarian. This is the Market Rebellion, and this is the take. Now, when we look at the markets right now, we look back to the month of April, not just yesterday, but the month of April. What an unbelievable performance April was, and understandably so after the punishing moves in the market when you go back to the month of March. So, some recovery, not everything, obviously, and we've got plenty of reasons for that. We still have the pandemic going on. Things are starting to open up just a little bit. States are starting to open up. So we'll start to get a better sense over time. Now, the government, with all that money, the $5 trillion, they certainly, or more, they've certainly backstopped the markets. They've given us an opportunity, and they've given the people out there an opportunity to still have some sort of income, some loans and so forth for the small businesses, all the rest of that. And we all know about that. And that's going to move all the way out to June. Now, by the end of June, then we're going to have to see, where is the economy? Where are the jobs? Are they starting to come back? Because yesterday, part of the reason we got sold off as much as we did, we looked at that jobs number once again. Not great, 3.8 million. And when you look, since the crisis began, the pandemic began, we're off about 30 million jobs. So that's a problem. These jobless claims certainly weighing on the markets, including despite the fact that we had some really impressive numbers. So the market still got sold off. There's still that dislocation because of technology. Technology, the outperformance that we have seen from tech. But yesterday, one of the interesting aspects of the market sell-off was chips were not, they were definitely accelerating past big cap tech type names. So the chip space getting pushed to the downside, financials getting pushed to the downside. As a matter of fact, financials yesterday off about 2.5%. Throw in the industrials that were off about 2% as well. So when we put in that whole mix, you look at the NASDAQ, it's down smaller. You look at the XLK, the tech index, only down about 0.5%. That says a lot about the strength of what we've seen through earnings season. But how much can the big five, or how much can technology really carry the markets and the narrow leadership that we've had? Now, we've talked about the expansion of some of that leadership to the upside, and we've seen some of that. But the financials now, which have been leading and having a pretty nice performance over the last week or more, that unfortunately under pressure, and that area under pressure, and that even leaks into today. But last night we heard from Amazon. We also heard from Apple. Those numbers were pretty impressive. Now, Amazon, when you look at the cloud space, AWS, not nearly as great. The growth was outstanding, but relatively speaking, for Amazon and in competition with Microsoft and the cloud space in general, not as much strength. And so that might be part of why it's giving back the gains that it had yesterday, giving back a lot of that. And that's why we're seeing that the pressure that's on Amazon. Now, Apple, different story. Apple services were fantastic. The read-throughs are always so difficult because of what we're dealing with right now in all these different earnings, and the guidance obviously at question as well. So that's really, but when I look at Apple, I still look at the services, which is an area that I thought we could at least get a little sense of how things are going, up about 16-17%. That's pretty impressive, I think, going in. And so Apple, a lot of folks out there, as a matter of fact, today, raising some of the price targets in Apple and in Amazon. So that tells you a little bit about the read-through that we're hearing and seeing from the analysts themselves. Now, today, major average is really under some serious pressure. And why is that? Well, now it's moved away from the pandemic and sort of still sticking a little bit with the pandemic, but with China and the debt and what do they owe, and how's the president going to deal with this, and what's going on, believe it or not, with the trade war. How is that going? We've all kind of forgotten about that because this pandemic came first. Now we're looking at the trade war. We're looking at, are there going to be any kind of money given back because of what's going on? And how is Trump going to be dealing with the Chinese? That's something that really put a lot of pressure on the markets. We're really pushing to the downside. Now, the fact that oil is up and higher today, trading actually over 20, that was something. But Exxon, Chevron, the big oil names, not really, because of probably the earnings reports and some of the CapEx cuts, whatever the case may be, those are down just a little bit today, despite the fact that you're seeing oil a little higher. Now, yesterday, we actually had volatility, stayed right in that range. We were in that 30 to 35. As a matter of fact, throughout the session, we literally traded very close to between 30 and 35, closing in a little over 34. Today, different story. We've spiked back up. We're out of the range now, 38, 39. Right now, as we speak, we're actually 37 and a half. I'm just doing a quick, 37 and a half. So that's exactly where we are right now in terms of the VIX. We're about 90 minutes into the trading session. The Dow Jones right now down nearly 2%. NASDAQ down a little bit more. S&P around 2%. So a little bit closer movement today across all of the indices that we look at for a little bit of that measurement. But financials, industrials, utilities, all down between 2.5% or more. 3M and Caterpillar, that's kind of moving on the industrial side. And then, of course, on the financials, look at Goldman Sachs. You can take a look at a name like American Express, JP Morgan, those kind of names. We're talking down 3%. Those financials definitely under some serious pressure today across the marketplace. Now, there's a lot of interesting parts about what's moving and what's not. But in the marketplace right now, we've seen retail really have some nice moves to the upside. Not happening today. Some serious pressure right now, consumer area really getting some pressure, whether it's Nike, whether it's Starbucks, Target, Amazon, all under pressure today. So that's just the tone. And obviously, as I say, I think a lot of that has to do with how are we going to deal with this next step, which is going to be dealing with and negotiating with China over all of the different situations that are going on right now. And how is that going to be handled? I think that's enough of a cloudiness that's why the markets don't like that. They need clarity. And when you don't have clarity, the markets tend to want to move to the downside. It's exactly what we're seeing today. Now, two big things. One, we've got some unusual activity for you. I'll hit that in just a second. Two, we got Warren Buffett and what Berkshire does every single year. This is the annual meeting. It's going to be tomorrow. That's going to be something that's going to be very exciting for a lot of people just to listen to. What we haven't really heard a lot from the Oracle, the big fella down in Omaha. We haven't really heard a lot from him. So what are we going to hear about where they've maybe found some opportunities? How are they deploying cash? A lot of folks were giving Warren a lot of heat back in January because they had so much cash that they weren't putting in the markets. Looks like Warren Buffett once again looked like a pretty sharp guy. Now we're going to find out, has he been deploying some of that money? Has he found opportunity and all the rest of that? How does he feel about the pandemic? We've heard bits and pieces here and there, but nothing really as much in depth as we're going to hear from this annual meeting. So I think this is going to be one of the biggest of his annual meetings, maybe ever, just based upon the timing of what everything is coming down. The fact that this is all really 2020 issues and everybody, like I say, with the flack because of all the cash that was on hand when we was back in January talking about the positions and how they were feeling about 2020 going forward and the price levels that they felt looked maybe a little bit higher than they wanted in terms of that's why they had so much cash. Where were they going to put some of that cash and being patient? I think a lot of times, sometimes as we go through the markets, you got to have discipline, but you also have to have patience. So let's get right to the unusual option activity. So the unusual option activity today is in an area where we've seen it. There's two sectors that have been extremely active. The semiconductors, the chip space, and materials, especially lately. We've seen Freeport-McMoRan, we've seen Tech Resources with an explosive move, follow-up paper. That's been a really interesting one that's actually delivered very rapidly. So looking for rapid delivery, well, letter X, U.S. Steel, another in the material space. What we're seeing today is the stock's trading only about 740. So under 750 right now, it's trading around 740. That's when we saw a lot of activity come in, 13,000 of next Friday. And this is part of the theme that we've been talking about. Expiration cycles that are only a couple of days out, maybe a week out, maybe 2 or 3 weeks out. But right now, it would probably be a longer term trade if we saw something that was expiring at the end of May. That would be longer term. That's how short everything is right now. So we are seeing 13,000 of those being bought for about 30 cents. Risk reward, those always fit into everybody. When you're looking at opportunities out there, that's something that obviously is a big part of what you're looking for. And we're looking for those types of opportunities each and every day. It's the market rebellion. So we're looking for where's the best risk reward opportunities that we can find. So we're continuing to see a lot of really short-term paper. We're seeing less that's going out even more than about 2 months for the most part. That seems to be the theme as well. We have a big pressuring day to day. We're looking at a market that's down now about 500 points. So 2.5% right now on the S&P to the downside, 2% for the Dow. So a big down day once again. following up yesterday's pressure, and we continue to have pressure. This today, more about China. Yesterday, more about the jobless issues. So a lot of different news sources. But folks, going into the weekend, I got to tell you, have a great weekend. Enjoy yourself. Be smart, social distancing, all the things that we need to continue to do. This isn't over, but it's nice to see that we see a little bit of light maybe out there at the end of the tunnel. Have a great weekend.